Hello, Face. How's everyone doing? Hope you had a great weekend. Hi, Ziggy, Zach, Zamir. Hope everyone's doing okay. Just want to give you a quick reminder that today's the last day. Buy one, get one free, only for new subscribers. Okay, happy Cyber Monday to everyone. Make it happy and get our service for half price. Okay, basically 2 months for the cost of one. And then you have everyone, all their ideas that we share on various platforms and member chat and pushed alerts. You'll get everyone's ideas pretty much 24/6. And then the chat room is open 7 days a week. You have pros like Amanda who trade for a living. I really think it could be helpful for someone who's, I don't know, say beginning to moderate level of trading, to be around pros that trade for a living. There are many in there. It's not an avocation for them, it's a vocation. Okay, so have that covered. I did tweet yesterday that my game and my edge has increased since being immersed with this crew. Okay, for the last, it'll be a couple years in April. And I was talking to a few of the mentees that I work with yesterday and talked about here on Face that I was going to go with, that this was real, the break in the dollar. Then we had our short and choppy week and kind of looked like maybe just a corrective bounce, and talked about buying the euro. It was around 113.32. We had a nice pop. I don't know what you guys do, but anytime there's 30 to 50 pips on a trade, I take half and move the stop to BE. So if we're going to go to 61.8, which, you know, is possible, especially now that I see this action and where it failed from, I'll be stopped out at 32 and I'll look for re-entries at 33.16. I was going to wait for that, but, you know, it's, you know, trying to be perfect, you miss a lot of opportunity. So if I am early, it still worked, and I'll be a buyer there. I'm going to give the dollar the benefit of the doubt on any strength for a while. This week, it's going to have to really close over 97.20, which, you know, some people, if you take out the spike, will be calling it some type of head and shoulders top. Also, probed the short side of NOK that was working for a while on these two candles here. Maybe we're going to get one more push up to fill out the 3-drive channel. But, you know, this could actually be somewhat of a proxy without the same beta as crude oil, you know, similar to Canada. So USD NOK seems to be in a topping formation to me. We'll see back under the candle low right here. If this bounce fails, it could accelerate to the downside. What can you say about a market that comes in 30 handles higher? Too early for me to short it. It's probably a buy, but nothing I'm going to do with this either. So really focused on the Dixie, focused on dollar pairs. US dollar yen isn't moving much higher. It was last night, but yields are starting to creep back up a little bit. So maybe that's going to be supportive. Just taking a look at the yield chart here, you know, we've come down quite a bit. A lot of that was probably the market caving as deep as it did last week. You know, some people more of a flow into treasuries. So where's the yield chart? Here's a 10-year, not up much, but enough, you know, so that we took out these lows. If the S&Ps really are going to put on something dramatic into, I had a guest on, he said higher into D second. Well, I mean, the way these moves happen nowadays, you know, we could be back at 314 yield. The yen, I think, is more attached to what's happening in yields than what's happening in equities. So here we are, 1325. You know, I don't know where to do it. I'll be watching these fib levels. Here we're at the 50% level. Let's see what happens at 61.8. But I have more conviction about doing something here with the dollar. Now, if I'm wrong, and this wasn't the peak, then even new highs would be bearish to me, more bearish, in fact. So we either roll over here, or we get a third drive to top, maybe 98.50, something like that, and you'd have something pretty classic for a third drive. Everyone see this? 1, 2, 3. So, you know, I only see two scenarios. Either this was a high, this is a failing rally, and we're going to take out 96, head lower, or they're going to squeeze dollar bears one more time and make a new high up here. So some of the moving averages are being supportive of the dollar and the euro in here, so we'll see. And remember, if you're not comfortable with your broker, maybe you could do better with, say, for example, a broker that gives you tighter spreads, and instead of the spread all going to them, you get a piece of it and you get rebates. So, you know, many people have talked about how great they feel. They say, well, yeah, I got a rebate check for $1,000 doing nothing. Well, you know what? You didn't do nothing. You're generating revenue trading your own account. You just weren't participating in it. And Trent and Justin can show you how to do that so that you're with a broker that, you know, is willing to share the trading fees that you generate on your own. And that's not doing nothing because, you know, it takes energy to trade. So you're putting energy into it, take some money out of it. Everyone with me on that? Yeah.
Coach.
Hey, buddy. Yeah.
Hey.
Nice to you. Yeah. Hi, how are you?
Needless to say that even if they end up staying with their broker, they can still add Forest Park FX as their introductory broker. And so for example, I'm a good example of that because we, you know, after doing research with Trent, we found out that, you know, for my type of trading, etc., you know, the current broker I'm using is absolutely fine. But, you know, we still added them as an introductory broker. So now I can, you know, I get a part of the commissions back.
They have leverage to be able to go into a broker because they represent a lot of traders and IBs to get the deal that you can't get as an individual, and they're willing to share it, pass it on to you.
Pretty so now, if I want, I can also subsidize my ForexAnalytix subscription.
Okay. All right. You're making so much. You don't even care about money anymore. You know?
No,
you know.
I never said that.
Yeah. Anyway, I hope you feel better, Steve. You know, I know what it's like the last 3 months having one virus after another. But anyway,
you know how kids at this age are.
Yeah. You have typhoid. What's your son's name again?
Jason.
Yeah, typhoid Jason in the house, and my granddaughter is typhoid Caitlin, and they are germ factories. Anyway. Stelios, I hope it's your name game and name day, and I didn't even know what you guys were talking about, but it's when you honor a saint. So, you know, here in America, it'd be Saint Stephen, in Greece, Saint Stelios, and, you know, none of us are saints. But I'll tell you what, Stelios has the heart of one and cares about all of our people. Everyone on the team, and Blake calls him Sappy, and he'll probably call me Sappy for saying this, but happy name day, Stelios.
Hey, thank you, Dale.
You're welcome, buddy. So,
and you know, Steve's got the same name actually, so it's his name day as well.
Yeah, but he's an atheist, so he said it didn't count. You know what? I think you're wrong, Steve. Doesn't matter what you think. You'll find that out one day. All right. So, you know, you guys know where I'm at on the dollar. You know, we'll see if the week before last was significant. I think we'll know by the end of the week whether the dollar breaks down under 96 or has another run in it. What are you guys thinking here? Or should I bring Blake on to tell us what he thinks in here?
Yeah, I think Blake has a limited time, so
Okay. Yeah,
let him
Blake likes to talk for about 15 minutes.
Is it really your name day today? Or
Yeah, both of us. Yeah.
Okay, and well, I know for both of you guys, but I didn't know. Then is it your name? So, anybody whose name's Stelios, just so you guys know,
Yeah.
it's their name day. So that's
Start calling.
Yeah. So, my father-in-law, his name is Nick or Nicholas. Yeah, Nikos. Nikos and Nikolaos, right? And that's actually my youngest son's middle name, but Nikolaos.
You married into Santa Claus's family, Blake.
I did. So his actual birthday is Christmas Day. So that's what he says. I mean, everybody, that's always says his birthday. Yeah.
Does he like the color red?
I don't think he actually knows that when his birthday is. I think he claimed Christmas just to be cool. But anyway, when's Nikolaos name day? It's obviously next month. You guys know? No.
Oh no, but
I'm googling it frantically.
Same here.
Stephen Kopsky, welcome to the FA family.
December 6th.
December 6th. Okay. So if your name is Nick, which is half the other Greek population, then your name day is on December 6th. So, and it's no joke when you talk to Greeks and you're like, hey, this is my if you've ever seen my big fat Greek wedding, yeah, this is Nick and Nick and Nikos and Nick, and they're all named Nick. It's kind of the same way.
There's a Zorba in there somewhere, isn't there, guys? Do you know anyone named Zorba? Steve Stelios? No.
Yeah, that's an American Greek name, I think.
Yeah.
Anyway, so as far as the dollar goes, well, first and foremost, it's really choppy out there. And I've got a view of the euro dollar, which is pretty much the same where we were at. Going into the weekend, and my thoughts are still the same. We had like a bull flag pattern that was developing. The flag is a little bit too, the distance of the flag here is more than 50% of the pole, so it's not looked at as, in my opinion, as a flag anymore. But we can actually remove the pole and still recognize that it might be an inverted head and shoulder pattern. So unless the euro gets below 113, I have a really difficult time being bearish the euro. Now, we did have German IFO numbers. I think they came in a little bit weaker than expected, slightly weaker than expected, but and the euro came under a little bit of pressure, but still, we're pretty much consolidating. And what at this point in time, what would get me a little bit more bullish the euro would be like a move above 114, so above here, or bearish if we get below 113.15, 113 and change. So somewhere, and as you notice, we are really smack dab in the middle of this range, and that to me tells me that we just need to be really careful where we're currently at. I'm not bullish or bearish at this moment, but a move above 114 and I get a little bit more excited. The thing is and I have to point out that equities are stronger. So the equity markets have gotten that lift off the support. There's a lot of a lot of bullishness or actually I should say optimism that the China-US luncheon, I guess, or meeting ahead of the G20 this weekend is going to go well. I would assume, and this is I'm just repeating what I said on the week ahead video if you guys didn't catch it, is that that the market is expecting that China and the US are going to play nice, and there's one thing that we have identified as investors in this market is that Donald Trump does care about the stock market. if he cares about anything, he cares about the stock market. So, excuse me, my allergies are still horrible here. So if we walk away from this next weekend and we feel that the China-U.S. relations have gotten better, whether or not they're going to continue to improve in the months ahead, we may get a boost in equities going into year end, and that would help the dollar weaken. And it may not affect the cable so much, because the cable is it's more of influenced by what's happening in the Brexit negotiations and the vote that's happening over the course of the next couple of weeks. But we could actually see the euro strengthen towards 114.50 and maybe even beyond. So typically if equities are higher, the dollar is going to be weaker, and that's the one thing that we have to realize. So you've got the euro that is like I said, it's just kind of sideways. We get above 114, 113.80. I actually, you could probably look at that resistance 113.85 as being, which is the highs of the day basically. It'd get a little bit more bullish if we got above that, which we're only 20 pips away. A currency pair that I think you should all be looking at is the dollar Canadian. Now, the dollar Canadian has been hugging this this uptrend line for the last. And actually, let me move this. I actually need to move that alarm. I'll move it a little bit closer to where we're at now. As long as the dollar Canadian's above this trend line, it's bullish. But crude's bouncing, crude's at its highs. Equities look pretty firm. There's the risk is starting to increase that we're going to break below these lows. Excuse me 1 second, I'm going to sneeze.
Shoo!
Oh man, my allergies are so bad right now. Horrible. Hold on. Go ahead. I have to mute when I sneeze. It's just that, or I'm gonna blow all your
You lost it when you muted. I acted like I actually sneezed.
Oh, you did. It was horrible. My allergies.
You ever click off a trade while you're sneezing?
No, I moved the mouse away from my dealing panel, thank God, because I have one click. So if I click once, I'm long, a couple million euro or
That could be a great or an expensive sneeze.
Yes, I've had both actually. What I was saying about the equity markets is the equity markets look pretty well bid, and that could reflect poorly on the dollar Canadian as far as if you're bullish. So that's one thing that we have to pay attention to, that you got crude oil that is, oh my God, crude oil has just been absolutely pounded. Now speaking of crude, so we're at what should be considered channel lows. Okay, you can probably take in that channel and do something like that. So we pivot. I had this drawn since last week. I mean, if you I think it's still on the analysis. Let's go over to crude oil. Steve had replicated it as well when he did this analysis over the weekend. We're in a really deep bearish channel, but as he alluded to in the daily, is the RSI is oversold in divergence. So if crude starts to bounce here, and let's say we get a modest bounce, let's say crude just bounces towards 60, that could really have a negative impact on the dollar Canadian. So dollar Canadian, I think you can stay bullish while it's above 130, 190, but if we start breaking below the 130, 180 level, you gotta think twice about being on the long side of crude oil here. So that's just something to think about. The Aussie is actually under a little bit of pressure, which is interesting because we have stronger equities, yet the Aussie is just, you can see how it's just, it's actually selling off pretty aggressively here. Not sure why, with equities as strong as they are, but the Aussie is pulling back. Kiwi's pulling back just a little bit. We had really weak retail sales gapped the Kiwi lower over the weekend, because the retail sales came out just before most people's FX data started. So the Kiwi gapped down and then rallied, and it's actually holding up pretty well, which isn't really surprising with the Kiwi, because the Kiwi's been, I want to say, pretty bullish for the last couple of weeks. So you can see here's the Kiwi. And you can probably say that we've got a nice flag or channel formed here. You can look at it probably like that. So Kiwi looks relatively strong. It's holding up well, but dips are supported. Swissy, not a lot to do here. I'm very undecided on what I want to do with the Swissy at this point. And as we pointed out, the Canadian's holding up, but is at risk, especially if crude comes under pressure.
So far, Blake, I'd say the Swissy had a much weaker correction to the upside than the euro did to the downside. I don't even think Swissy is corrected 38% on this little pop here.
No, and it's increasingly expensive to hold short dollar Swiss.
Really?
Oh God, yeah. I mean, with rates here in the U.S. going higher, and Switzerland is still in negative interest rate. Yeah.
Wow.
Like by 3/4 basis point. I mean, it's very expensive to hold a short dollar Swiss position. So that and so it doesn't surprise me that it's so buoyant. I think if the dollar Swiss is really to reverse and start to see some weakness, it'd be because we are under serious duress with equities, which isn't the case right now. Like I said, S&Ps are holding up here. I don't think anybody's looking at the S&P as being extremely bearish. I mean, we are correcting, and obviously, for the year we're slightly lower for the year, or maybe break even for the year. I guess if you went to, the S&P is down. I guess if you go to January 1st, which would be right here roughly, I mean, we're break even. So we look at that as being a possible reversal longer term for the S&P as a technician. But if you're just an investor and you're thinking about it from a more of a long-term investment standpoint, you're like, oh well, 2018's been a scratch. Well, that's not so bad after having 6-7 years of just nonstop rallying. So people aren't really worried about equities at this moment. I think technically we can look at equities and say, hey, the risks are starting to increase, so we're going to see a longer term reversal. But until we get more of a breakdown of longer term trends, and we start seeing a break below like this year's lows, that might have more of a negative influence on the dollar Swiss, where people will say, I don't care if I have to pay a higher interest to hold Swiss francs. I'd be willing to hold on to them because I think that the equity markets are going to pull back much more aggressively. We're just not seeing that as of yet. So that's probably the reason why, Dale, and great observation, that we're not seeing much of a pullback in the dollar Swiss, is just because, again, it's really expensive to hold a long dollar or a short dollar Swiss position. So
great point.
Yeah. Now, as far as the dollar index goes, I mean, you look at the dollar, and the dollar's, we broke higher out of this little triangle on Friday. Okay, we broke higher out of the triangle on Friday, but very limited rally. Not a break to highs now, and you can see that the 618's holding us up, and I think as I pointed out with the euro, and I pointed out with the Canadian, I think the risks are starting to mount that the dollar is looking for a pullback. And again, if things go well with China and the trade talks over the weekend, that is going to be what could significantly weaken the dollar. Now, we do have Draghi who's slated to speak a little bit later this week, I think on Wednesday. Actually, it's Thursday. So we have Draghi that's speaking on Thursday, and he's going to speak at the Global Research Forum on International Macroeconomics and Finance in Frankfurt. if he starts to allude to the idea that the ECB may start to also consider normalizing rates, that could also weigh on the or that could weigh on the dollar, as we could quite possibly get a rally in the euro going into the weekend. I think the risk at this point is you got to be a little careful with dollars, being long dollars going into this the end of the week. Now I know it's only Monday, but I think that's the increasing risk. I wouldn't want to be short the euro right now, frankly. Now again, if we broke below 113, that would change my tune, but as of right now, I'm still looking at it being fairly constructive for bulls. And we're not too far off our highs, and really a move above 114 would be kind of bullish, and a move above 114.50, you definitely don't want to be short the euro. That would be the risk, is that you start to get a lot of momentum to the upside with this inverted head and shoulder pattern. So those are just things that I'm thinking about as we navigate through the markets. And I'm not sold. Like I said, I'm not sold on dollar strength or dollar weakness just yet, but I think the risks are starting to increase for now I think Grega is coming in today. I don't know if he is here. It doesn't look like he's here yet. I heard somebody's mic, and I was thinking maybe that might be Gregor Horvat. So I know Greg is going to be popping in today. Steve's
he's going to be with us soon. Yeah. Yeah,
and Steve, I know you're not feeling 100%, so it's nice that we can get some of the Elliott wave analysis. So, but I want to mention today, all right, and I'm gonna showcase the guys and gals in the chat room. This is our ForexAnalytix chat room, and as you can see, we have 100 people in there right now. And as Europe winds down, the number of people in there usually around the 80s. But yeah, you guys are on Jumbotron. If you guys were considering being part of the ForexAnalytix community, now's the time. It is Cyber Monday, and it's basically 50% off. Buy 1 month, get 1 month free. And this is only for new members. And for those people that are current members and always looking for see if they can get a better deal, throughout the course of the year, we usually offer some deals where you can get annual or semi-annual subscriptions at a discount. But this Cyber Monday, what's that?
See Christmas. I mean, we're going to have something Christmas for them.
Yeah, we'll have something around the holidays. We'll have something around the new year. But if you were looking and you were thinking about, hey, I want to try out ForexAnalytix and see what it's like, this is the time to do it, because it's buy 1 month, get 1 month free. It's a 50% off, and that's a legitimate great deal for somebody who is looking to test the waters with ForexAnalytix, and this way you can really be fully immersed in our community. And this is oh, that's nice, Oliver. and we have a lot of great traders in this chat room, and that's that's just an addition on top of the ForexAnalytix product and platform, where you get notified of support and resistance level breaches, new patterns in play whenever they're activated. Like Greg put out apparently he's bullish the euro, which was pushed out 5 hours ago. And you get notified of all these new updates as new analysis comes through. And these updates, you can see as we get new technical analysis on the CAD like an hour ago, this gets pushed directly to your phone. So you guys, make sure you take advantage of this offer. It will be expiring at the end of today. So, and I look forward to seeing you guys in the chat room, because this is where I'm at all day long. This week will be a little bit light for me. I've got some I'm in here, but I won't be chatting as much as I normally do this week, but that doesn't matter, because there's 100 other traders that are awesome in here that love to chat, and we chat all day. So anyway, with that being said, I'm going to pass it over to Grega. Hey, how's it going?
Hey, Grega.
Hey.
Hey, welcome to the party.
Hey, Wizard.
Hey there.
Well, you know, Greg, I'm actually going to pass you the charts. I know, or Steve, unless there's a couple things you wanted to go over, it's up to you.
No. We'll let Greg start, and I'm always, exchanging views with him. So, give him the screen directly.
Great. All right. Well, Greg, thanks for being here. I know, Steve, I hope you feel better. And Stelios,
thank you, mate.
Your voice and Coach, thank you guys. Have a great trading session, everyone.
You too, Blaker.
All right. Bye-bye, guys.
See you later, mate. Bye-bye.
Bye-bye.
Yeah, you know, you don't talk to Grega, and I bet Grega will back me up. You call Grega to pick his brain. What do you think?
Of course.
Because he doesn't ask you many questions. He doesn't ask you many questions, does he?
I see that you start with euros, Greg. There, I agree with you. I mean, the move.
Actually, I was just, as Blake talked, I just went through some different markets. So actually, what I want to bring attention is probably start with the euro dollar. So I have a list here of interesting markets that I'm tracking.
But by the way, since you showed it, I agree with you 100%. That's what I'm looking for. I'm looking for one more push lower in all the euro and pound crosses. I mean, euro Aussie, euro Kiwi, pound Aussie, pound Kiwi, because it's obvious that this was some kind of a wave 3, and as I see, you think that this is the first leg down of a correction, right? So you expect then a bounce, and I agree on that as well. So we're on the same page, and I think
we have been in this uptrend since February. So I think that now a new reversal has begun. I think that this has also something to do with Aussie dollar, because I see their market turning up for a correction with room for more upside. So on the other hand, I think that this euro Aussie could also see a deeper pullback. We also see gold still in a corrective phase with room for more upside as well, so which is supportive for Aussie. I will also show you Hang Seng Index, which also suggests that maybe Aussie dollar could strengthen actually. So
perfect. Let's go one by one. I mean, whatever you think is the most important.
Of course. So since we are talking about the Aussie dollar, just let me show you what I'm looking at. So clearly, we are still in a bearish trend for a fifth wave of decline. So, which means I'm expecting a drop below January 2016 levels, because clearly this trend is also bearish on a very big time frame here. I'm looking at a monthly chart. So I'm expecting more weakness, but as you know, market will make a corrective recovery. And it looks like that we are now in a deeper corrective bounce since market moved above this upper channel resistance line. So what I'm looking at is for a wave C of wave 4 push back to the area of a former wave 4, which was at 74.50. So looking at the 4-hour chart, notice that this is also a 5 waves of recovery.
Keep in mind, 74.50 is also the double confluence. First of all, we agree as well. I mean, from a basic technical analysis perspective as well, that's what I said last week, that my gut feeling tells me that Aussie and Kiwi have one more bounce left to the upside. And keep in mind that the level you mentioned about the Aussie is also a very nice double confluence of resistances, the 200 daily moving average and the 38.2 of this whole move lower. So it's a perfect target. It's not only a perfect Elliott wave target, it's a perfect target in general.
Blake just Skyped that Draghi will be speaking in Parliament. Is that the UK Parliament in 20 minutes? Or the EU Parliament? That was a message from Blake. 20 minutes.
Good question. I don't think it's going to be the UK Parliament. I'm going to check it.
Okay.
I don't think either. I think because Novotny was speaking before and Kere, so no, yeah.
Okay.
So I don't think it's for the UK Parliament. I mean, he has no place there.
Yeah,
anyhow.
what would he be doing there?
Yeah, absolutely. So Greg, I think it's a perfect upside target.
Yes, it is the European Parliament.
Okay.
Yeah, makes sense.
Yes, I'm just looking at Forex Factory as well. So Aussie dollar, yes, I think that there is room for more upside. And what is interesting is that we have these 5 waves of recovery, and now we are probably in an ABC setback. So I'm looking for 71.60 to provide a very good support, maybe even a buying opportunity to catch this wave C to the upside as well. Also, I have here this Hang Seng index that I mentioned it earlier. Just a second to pull it up. Okay. So,
you know, it's interesting. Are you going to show the bonds with it? Because I saw a chart like that on Bloomberg where there was some type of unusual divergence with Hang Seng still going down and yields dropping in the U.S.
No, actually, what I'm looking at, referring to, Dale, is that Hang Seng index, which is in black, is recovering. You can see this was wave A, and now we are moving sideways. So expecting more upside after this triangle, right?
So triangle.
Yes, so if we respect the positive correlation with Aussie dollar, okay, then this Aussie dollar should also continue to the upside after a pullback. And so actually why this is important for me is because we have two different markets showing different patterns but suggest the same direction, more upside after a pullback. So I think that Aussie dollar actually, based on Hang Seng index, could really be interesting. I also think that Monday, Tuesday sessions can provide maybe some slow price action, maybe some failure push in both sides of the market. So I'm thinking that maybe we'll see in the first part of the week move to the downside, and then buying opportunities could occur in the second part of the week. Also, if we look at the gold, which, as you know, is definitely positive for Aussie, if you see more upside there. So on gold, if you recall, Steve, I was looking for only a free wave of recovery back to this resistance from December
that's
to
going to be a double zigzag, eh?
Yes, exactly. So the fact is, why I'm looking for more complex and deeper corrective recovery is very simple. On a 4-hour chart, this decline, as you can see from this October highs, was made only by 3 waves, and this reversal to the upside is very strong and can be even counted in 5 waves here on
so probably double zigzag, likely interpretation here.
Yes, so the idea is that we'll probably take these highs out from 1240 of 1240. So
by the way, on a technical side note, since you mentioned the Hang Seng, I wanted to make that clarification. Since this is a textbook triangle that you showed in Hang Seng, it in essence eliminates the probability that this is an impulsive turn higher, because if it was an impulsive turn higher, we wouldn't find a triangle in a wave 2, right? So I mean, this increases the likelihood that it's just a corrective bounce, an ABC, that we're expecting to happen in Hang Seng, right?
Yes.
Am I wrong about that?
Yes, very good point. And actually, this may confirm the idea that even Aussie dollar could see later limited upside, as we said at that, what was the number? That 74.50 as well. So it makes actually perfect sense what you are saying.
Okay, cool.
Okay. Another, do you have any questions? Just please let me know.
So far, no, but
Hang Seng.
What about the? I guess obviously that the outlook is more or less the same, and they have the same outlook for Kiwi. I'm expecting a pullback towards perhaps 67 cents before giving another buying opportunity. I'm guessing that you don't have a very different outlook than you have for the Aussie, so I'm guessing that you're looking for something similar.
Just a second. Actually, as you can see here on New Zealand dollar, we have a very aggressive bounce. I mean, against New Zealand dollar is also, as you know, trading to the downside. So it appears that we are going to see more upside, but maybe, as you said yourself, after a pullback. Even here, and as I'm looking on the smaller time frame, I see an overhead price action. So I would probably watch out this week for market maybe to find a support down there.
Perhaps a double zigzag to 67, yeah.
Yes, and even if I'm looking at this right now. This could easily be counted bullish, right? So maybe this is now wave 4 support back to 670, and then we see a turn to the upside, and maybe this support, potential support zone, could come in play at the same time when Aussie dollar will meet its support as well.
Indeed.
Okay,
so what about the stock markets? Because I know that a lot of people are, you know, I see, first of all, I mean, just by probing my environment, I see that sentiment having to do with stocks is still quite divided. I mean, we obviously have had a bearish move to the downside with this time the Nasdaq leading lower as it was leading for a long period of time higher. But I still see that the vast majority of the bulls are viewing this as a correction, and many of them are trying to bottom pick this market. Personally, I do think that we might rebound from here, but I don't think that we're done. So would you enlighten us? What do you think now that we've had some more price action unfold? What kind of a move lower do you think that we're seeing here? Let's say in the S&P, which is the benchmark to begin with.
I still think that this pullback from this week highs is corrective, and that we are here in a wave 4, which can be forming a flat correction or irregular correction. So I assume that we will see a new recovery next year. Also looking at this daily time frame chart, I think that this is a very nice support down there at February levels. So maybe we have another push to the downside coming, and then turn to the upside may occur. Also looking at this 4-hour chart, now this was quite deep pullback for a fourth wave, right? But it's still a valid, because we have stopped at the area of a former wave 4. We were still far away from this wave 2 swing lows. So it still can be 5 waves of decline, but even if you respect different scenarios such as ABC drop, then you would still anticipate a bounce after we reach a new lows, right? So I'm expecting a reversal to the upside, but as I said, I think that these levels from October will have to be taken out first. I'm sure that there are plenty of stops down there because of this very nice bounce that we have experienced at the start of November. So a lot of investors probably already took first positions on the long side, and I would not be surprised if we see a retest of these levels.
Okay,
also,
so your main interpretation now would be of an irregular correction?
Yes.
Okay.
Also here, if we take a look at Dow Jones, I'm also tracking a 3 waves of decline, expecting a break to new lows, and then a reversal to the upside.
What about the Nasdaq, which is by far the weakest? And not only that, we've had individual looks at the vast majority of the, if not all the FANG stocks, and you know, the vast majority of them are actually trading in a bear market, right? I mean, they've lost more than 20% in a very, very short period of time. Do you also believe that these specific stocks can recover the highs, or you believe that we might see a wave 5, for example, in the S&P, with some divergence in the Nasdaq, pointing out to you know, a change in the market's momentum? Because I do think it's probable that we might see, let's say, a new high in the S&P, but Nasdaq this time not following and giving us some strong divergence. What is your view on that?
I mean, if from basic technical analysis, if this is a 3-wave decline, and if this will be proved to be a 3-wave movement, which means if you will see a recovery back above 7230, then clearly this whole correction, whenever it's completed, should be fully retraced. So in such case, I would be looking back to new all-time highs. Even I still don't think, and I'm not sure why, I should ignore this uptrend, since clearly I don't see 5 waves of decline from the highs. So this can be easily wave C. Also, if we take a look at DAX, here is monthly chart, just a second, German 30. I have quotes from
First of all, before
yes.
it loads, let me say I agree with you. I mean, I've kept saying here that, you know, we have to keep our main interpretation as a corrective move lower. Now, since you're about to go to DAX, I have to say that having to do with the DAX, I'm a little bit more reserved because the DAX has kept underperforming, and we've also had that break below this beautiful head and shoulders formation that we had in the DAX. The target is quite lower. Of course, you know, it's not written in stone that you're going to reach the target of a head and shoulders formation. But, you know, we also have to keep in mind that the DAX has been underperforming for a long period of time, the US stocks, right?
Yeah, Steve, maybe like your fundamental argument for EM to outperform US might also apply to European bourses, which have underperformed. You know, if the dollar is going to weaken, as you know, many of our team believe it's going to, maybe that's the catalyst behind it. What do you think?
Yeah, might be.
Okay.
Speaking of which, after you show us the DAX, why don't we go to the DXY, since we mentioned it, Grega?
Sure.
Let's see the DAX first. What do you think about the DAX? I see that you're looking for an ABC here as well.
Yes, I'm looking, and I'm staying bullish here. We are still above this very important trend line support connected from 2011 lows, and have actually two different wave counts. One is that we are maybe here in ending diagonal. If we completed maybe a triangle back in 2011, so this after all is still only 3 waves of decline, and I would not be surprised if we turn to the upside. Also here I have the second count, which suggests that as long as we are above 10,400, I think that this can be even seen as a wave 4, which means sub-wave of a fifth wave.
Which is your bull line? Which is the level that would actually turn you bearish in the DAX? I mean, let's assume that we don't recover from here and we accelerate lower. Which would be the level that would get you considering, you know, a different interpretation here in the DAX?
Just a second.
And also, Greg, if your preferred count is correct and we're going to new highs, I know you pay attention to time as well as price. Any idea when we might complete a fifth wave in time up there next spring or so?
Probably in the next 2 years or so.
Oh, 2 years. Okay.
Yeah, so 2009, this bullish cycle, this fifth wave, could be then seen through 2019. And as you know, tops take a lot of time to unfold and to be visible. Yeah. So then in 2020 could be visible top based on
Thank you. Yeah, it takes time to turn a battleship around.
Yes. So, Steve, you asked when I would turn bearish on DAX. So actually, as you know, if you're familiar, anyone who is familiar with an Elliott wave principle, as long you have these parallel channels and market making only 3 waves decline where wave C is trading still within this channel, it means that there's still a solid support and that we actually could turn to the upside. But
so a penetration and an acceleration that would make this C wave look like a 3
occurs would result into wave 3. But that doesn't mean that if you see a spike below 10,500, I want to see a very strong bearish leg, a very strong bearish candlestick with a weekly close below these levels, below this line, with increase in momentum, with impulsive characteristic on a shorter time frames. Only then I would say that this was not wave C, but rather wave 3 in progress. Okay. So we are, as you can see yourself, we are now still at very healthy levels actually. Based on ABC decline.
What about the DXY? What do you think? Where do you think we're going from here?
Firstly, let me look at euro dollar. So on euro dollar, I'm tracking this head and shoulders pattern. We have seen a very nice bounce recently, and now so far we reversed to the downside only in 3 waves.
Yeah, that was a great bottom call by you, Grega, at the bottom at 12:30, 12:20. Nice call, buddy.
Yes, thanks. So actually, this may not be over yet. I mean, if this is really a corrective decline, then you know that we are going much, much higher. I mean, the first target that I would be looking at is this swing high from October. Of course, if this is really going to be head and shoulders pattern, then you know the targets are even higher. But on a daily time frame, what I'm referring to is still this corrective phase. Okay. So actually, I'm expecting sideways price action in this environment as a flat correction, where we may retrace even back to these wave A levels. So the idea is that I don't think that this wave 2 was just so small. Okay, I just think that we will see something more complex, more confusing from the markets before we may really see next very strong push to the downside.
So more FX traders will get chopped up with Euro USD because everybody's going to be looking to buy near the highs. Now everybody was looking to sell near the lows, the usual pain.
Who's everybody?
You know how it is, Coach. For example, when we penetrated through 113, do you have any you have any reason to believe that a lot of people weren't trapped trying to short for a new low, and everybody was looking at the big head and shoulders?
All you have to do is listen to Gregor Horvat, the wizard.
Yeah, there's no disagreement there.
Of course.
All right. So you know, if they didn't, you know, if they're not part of our team, you know, a subscriber or subscribe to Grega, you know, then I guess maybe they could have. But you know, our room wasn't saying get short in the hole, and you know, I mean, that's another reason to, you know, take advantage of Cyber Monday. And anyway, I've tweeted that I've gained an edge, and I'm a better trader now because I've immersed myself with this crew. And Bunky just tweeted, Greg doing his wave counts. Sweet way to start off the week.
Indeed.
You got fans, buddy.
Yeah.
Including me. And Steve's a fan.
Yes.
He's a contemporary, but he's a fan.
He knows how to count now. Okay, so another thing that we can look at is crude oil. Now, this showed.
So you're also looking for another leg lower in the DXY, from what I see. I see the same thing. I mean, we've been in an ascending channel in the DXY, but momentum has really stalled to the upside. I think that for me, a confirmation would be, Grega, a daily close below 96 in the DXY. I think that's going to do it for me. I'm going to be looking for at least a revisit of the 93.80 low then. I don't know if you have any other targets, but I'm looking for 93.80 if we close below 96.
Yes,
what is your target?
Yes, around 90, 93, 94 if we are in a flat. So what I would highlight here is that you can see that we have some overlapping price activity here.
Yeah, it's a perfect channel actually. It's a perfect channel.
And we have also a divergence here on the RSI. So for me, if someone thinks that we are already in a very strong wave 3, this is not the characteristics you want to see within a wave 3. You would have to see an increase in momentum and very sharp and big moves in a short period of time, such was here, for example, in May. And clearly, this is not the same personality. So I think that this could easily be wave B as part of ongoing correction. Now, another thing I want to take a look at is crude oil. Now, this was sent by my friend. It's crude oil. Okay. Now, pay attention to January.
Seasonality. Yeah.
And what is interesting is that always when market, since 2007, always when market was in a downtrend, crude oil, before January, the market then recovered. It doesn't mean that each January we have been bullish. What I'm saying is that if you see now market in a decline, going into the year end, you may see a recovery at the start of next year. And this has been the case since 2007. So here was a very strong decline. Then at the start of next year, in 2007, we have seen a bounce. In 2009 was the similar. We have seen previously very strong move to the downside, then a recovery. In January 2014 also, we have seen a nice drop here, a recovery.
January 2012 also called more or less the high, which shows what I have been saying over and over again, that seasonality is not also important, as a cyclical component, although it does play a role in specific markets, but it's also important because it's statistically proven that the chances of finding a high or a low are much increased at the very beginning or the very end of a year, or the very beginning or the very end of a month, than at any other random period in time. So just by looking at this chart, it's a very good example in those many years. I mean, what is it like? The past 11 years, we've had many examples that January we either got a low or a high, right?
Yeah, sure. But I'm expecting to see, I will not say a low, but a recovery, temporary. Okay, because I think that then we will see more weakness, more damage ahead. But what is interesting, based on these examples, since we are in very strong blackdown, I mean, it's definitely would not be surprised to see some kind of recovery, because we know that recovery will come, right? At least short-term bounce. So I would not be surprised if we see bounce back to $60 per barrel, and then maybe we'll continue to the downside. So I would pay attention to start of the year for a potential bounce. And also, if you take a look at the wave count here, I'm seeing prices in wave A. So we have seen a nice break of this trend line. So I have to turn bearish on crude oil, but wave B could unfold at the start of next year. Also, looking at the 4-hour chart, maybe we are now finishing these fifth waves of decline within wave A. So a bounce could definitely be in the cards. I mean, the wave structure, and since we are approaching the year end, I mean, we really could see some recovery here coming in play.
No, definitely. Anyhow, this rate of depreciation is literally unsustainable. I mean, sooner rather than later, we have to see, some kind of a bounce unfolding from here. Obviously, the momentum of this move lower is such that does not allow for any other interpretation that any bigger rebound should be sold. So I'm 100% with you. The question now that emerges, though, is the following. And coincidentally, I see a friend that is following the webinar, Tom, asking the same thing, more or less what I would ask. He says, put the wave count on that WTI monthly out of curiosity, he says. And my question would have been the same, which is more or less, now that you've seen this unexpectedly strong move lower unfold, what is your view of what's coming ahead? Yeah, okay. You still believe that this impulsive move is just wave A, so you're obviously expecting lower prices, but are you sure? I mean, doesn't this impulsive move lower perhaps open other possibilities or other interpretations in your mind for what's coming ahead in time?
No, just a second. I'm looking at historical chart, and I will show you. Okay.
Yeah, there are Ellioticians, Steve, talking about $25 crude.
If someone doesn't know this website, maybe someone who's watching could put this down. It's called macrotrends.net. Okay, you have all of important major markets going back to 1940, right? So,
by the way, for those that don't know, let me explain here. The reason you're seeing the scale of prices on the left not being analogical is because this is a logarithmic display. The reason we use log scale is because if you want to have a look at the long-term picture, you want to see a chart that depicts equal changes in percentage between swings, because it makes much more sense. So if you want to look something in the shorter term, you use an arithmetic scale, but if you want to have a look at something at the long term, an arithmetic scale actually is not going to put things in context, because a move from 100 to 110 is a 10% move, but a move from a 20 to 30, it's still $10, but it's a 50% move, right? So it doesn't put things into context. Go on, Greg. I just wanted to explain that in case people were wondering.
What I want to add here, personally, I don't like to do wave counts on log scales, okay? Because
I understand.
In log scales, you may not see the real extended waves, and which means you may not see Amania cycles. Okay.
Yeah, you're right. Because it smoothens that out. Yeah.
Which is really important when it comes to Elliott wave, because Elliott wave perfectly works exactly in the markets where you see a very strong move, very extended waves. Another thing, what I would suggest to everyone before they look to log scales, the fact is that they are looking at Bitcoin and they will see log scale and they will say Bitcoin is still in uptrend. But in log scales, rather than just looking at the price structure, you really have to look at the price itself, because from 19,000 down to 4,000, it's not an uptrend, it's a downtrend.
Absolutely.
So that's very important when it comes to analyzing the log scale. You have to look at the price to make sure either you are in an uptrend or in downtrend, because on log scale on Bitcoin you will still see uptrend.
I agree,
John McAfee getting kind of nervous. I don't know.
Yeah.
I don't know what he's going to do.
By the way,
then he has to go to the bathroom. Huh?
Let me add to that I agree 100% with what Greg has said, but keep in mind that from a basic technical analysis perspective, theory says that having to do with technical structures, they're valid on a logarithmic scale as well.
Draghi must be speaking. Euro's coming up.
Yeah. Draghi is probably not that bullish as it seems. Go ahead.
Okay, so what I wanted to show you here, because I don't have that much historical data in my platform. So actually here, I would see this as a wave A, down from 1980 to 1999 or so. And then we have seen a recovery, which I would label as a wave B. And now I would be looking for an ending diagonal into wave C, like waves 1, 2, 3, 4, 5. Okay.
Out of curiosity, why an ending diagonal, for example, and not an irregular correction, which would point even to new lows? Why not a double zigzag? I mean, why would you be so clearly for that interpretation?
I mean, because I like the personality. I like the fact that we have seen here just a temporary spike to a new high, which occurs very often in wave B. Also, if you look closely at this substructure, you can see 3 subwaves only here from that low. This was wave A, wave B, and then you have 5 subwaves within wave C. Okay, so this is the main reason, and also because here I can see a divergence contracting line.
So in essence, you're expecting a running flat, this whole period to be a running flat, right?
Oh, yes, exactly.
Down to $11?
No.
I would be looking down to 20 and then a reversal to down. I mean, a retest of these levels could occur of 2016 lows. But actually, what is really probably the most important is that even if we ignore the big picture, which is irrelevant at this stage, the most important is that we have turned to the downside in impulsive fashion, that previously this rise was proved to be corrective. It was only in 3 waves. So at least for another 3 wave drop, we should stay bearish on crude oil. And this is all what it matters. And if we really see this market going back to these levels, then I think this could be actually just another great opportunity.
And to be honest, to close this, I think that by somebody looking at gold, silver, crude, although I'm fundamentally very bearish the dollar in the medium to long term, I have to agree with you, Grega, that it looks like we have more strength ahead before we can see a bigger turn in the dollar. I think, you know, if you objectively look at those commodities, it's not hard to notice that, right?
Yes, sure. I mean, but you know, this may take a lot of time and maybe even.
Yeah, absolutely.
I mean, maybe dollar will still catch up some moves that will be seen in commodities real fast. So, because gold, after all, still has a room towards $1,000.
Yeah, I agree with you 100%.
So,
okay, guys.
Okay.
Thank you
very
Greg.
much.
Thank you, Mandy, for your patience. So here we go, Mandy. I'm going to make you the presenter. Been a long time since you and I have had a conversation. Looking forward to catching up with you. Welcome back to FACE.
Okay, can you hear me?
I can, Mandy. Welcome back.
Hello.
How are you?
Thank you so much. I'm really well, thank you.
At midnight, right? So are you going to share?
It's actually 1 in the morning.
Oh,
no,
okay.
Actually, I decided not to share my screen this time. So
okay. All right. All right. Well, then I'll show something on my screen.
Okay. Here's something cool.
How about your website?
My website. People will be distracted. Okay, I can do that.
I don't think so. I mean, at least then people will know where to find you at tradingpsychology.com.au. And I'll just put my.
Okay.
There we go.
What does it show now?
Okay. So it's showing your 2-day masterclass in Sydney, the 17th and 18th in November. So why don't we start there?
That was actually last week.
Yeah. So in this masterclass that you held in Sydney, what areas did you cover during this weekend seminar webinar?
That was actually something completely different that I've done for the first time. I teamed up with Tony Sycamore and Matt Starkey, as you can see the photos, right? And also Linda Rushke. And she was willing to do live streaming from the US, which was amazing. And so I decided to do some training together with strategy. And because, as you know, strategy is still a really big gap for traders. And I thought it was just a really amazing experience for traders to, because both Tony and Matt are ex-Goldman Sachs. And I mean, Linda is one of the best traders in the world. And, you know, the retail traders don't get access to this kind of people. And so that was my goal, to make it available to traders. That was what the masterclass was about, in very short. And so what I was doing, I was facilitating that.
Okay, so I have a question for you. That you focus on trader psychology, which is most imperative if you're a discretionary trader. Now, I've noticed, it's probably not recent, maybe it's just becoming more popular, that retail FX traders are starting to implement the use of EAs and even getting their own coding to have their own algo to work with. Wouldn't that be an aid to a trader, because it takes away a lot of the psychological barriers that people have to trade? It's just, you know, don't touch it and, you know, let it do its work. What's your view on traders using algos, EAs, robots, etc.?
Yeah, that's a fantastic question, actually. You know, do you know Andrew Swanscott from Better Systems Trader?
No.
He's a Melbourne boy as well. Better Systems Traders, there's some really amazing, he has some really great interviews as well. And I had this conversation because what Andrew is all about is, you know, automating your systems. And does it really help with trading psychology? And we both concluded, I'm not a system, I don't use EAs. I'm not skilled in that side, you know, too old for that. I'm still old school, you know, horse and carriage. But so Andrew's all about automating your system.
Oh, come into the 21st century, Mandy.
Okay.
Someone's going to drag you into it. So what was your conclusion? Does it help people because they're not as dependent upon their own psychology to make decisions, that they're almost predetermined decisions that it takes the pressure off them to make? And robots really, they don't make mistakes, only do what you code them to do.
Yeah, so the conclusion was it does not help. The reason being, yeah, interesting, right?
So you could even sabotage, if you don't have the right psychology, you could even sabotage a robot or an EA. Is that why?
Not quite. Actually, traders do that because EAs, they need babysitting as well. I have a friend, she ran an EA, and that EA ran hammock and just kept exercising trades and until the account was empty. So it worked fine for a few months, and then suddenly it had a bug out of nowhere. So EAs also need to be babysitted and can hence be manipulated. But the main reason for me is that what does it take to build an EA that works well? It has exactly the same requirements like when you work discretionary. You need to have a strategy that works. You need to know what you're doing. You need to know how to code. When you choose a coder, how do you know that this coder knows what they're doing? How do you know that this coder irons out all the bugs? We have time changes left, right, and center from daylight savings to not daylight savings. How do you code this?
Right.
How do you code announcements, spreads, right? So it needs to be people who are skilled. And it's the same with trading a discretionary system. You need to have a certain level of skill, and that was what Andrew and I came was the conclusion. If you know how to code, if you have a system that works, then definitely coding is the way to go in EA. But this is where most traders are lacking.
If you know how to, there are no shortcuts.
No.
A lot of people look at that as a possible shortcut. I've read articles, my robot trades better than me, things like that. So
because you know the markets, you know how to trade. And that's why the robot is an aid helping you.
I see. So use it as an assistant, but not as the boss. You're still the boss.
Yeah, I love that. Yeah, exactly.
Okay, so
as boss, you still need to know how to run the company.
Right. Okay, so you're still the boss. It's still your responsibility, and the advantages are it could run when you're sleeping. There aren't any salary negotiations, and you don't have to pay Social Security, match Social Security with that employee. And plus the biggest bonus, they never complain.
They never complain, exactly, unless they start doing their own thing. But let me ask you a question. May I ask you a question, Dale?
Sure.
What do you reckon trading? Is it nature or is it nurture?
That's a great question. I think there's a lot of nature. That's why fibs work and cycles work. But nurture, that's an interesting concept because you can't do anything without nurturing. So I'm not sure which is more, but I'd be interested in what you're trying to get at here.
So if we look at traders, right, remember the turtle experiment, and they said that the turtle experiment failed. And so I had a conversation with a few amazing traders about are great traders born or made? And my thought, having profiled some amazing traders and also some really crappy traders, I believe it's like, let's say, when we look at tennis, not everybody can be a Roger Federer, not everybody can be a Nadal, but everybody can be a great tennis player. Let's say in the top, between the top 100 and the top 50. And I see the same for traders. Not everybody can be a Linda Rushke or a Marty Schwartz, or maybe even a Gregor or Blake. But every trader, every human being can, unless they have intellectual challenges or so, of course, then it's more difficult. But I think every trader can succeed to a certain level in trading. That's my belief.
Okay, and the nurturing gets them there?
So
or the nurturing is what brings people up to a level not quite as high as those who are born rather than made.
Exactly.
Okay.
So
I always understand you.
Yeah, you do. Thank you. Thank you for translating it to American.
You're welcome.
So
how do you go about nurturing your mentees?
So what I need to look at is, and again, I have profiled so many amazing traders, and they all have a similar profile. They all have, so when I talk profiling, I talk about disk profiling, I talk about something that we call meta programs. So meta programs is, how do we habitually interact with the world? So Dale, you're married, right?
Yes.
So if your wife would say, I'm thirsty, how would you react?
I would ask her if I could bring her something.
Yeah, so some would think, oh, that's an odd question to ask. That's something odd to say. Why doesn't she just get up and get herself a drink? You say, oh, can I get you a drink? So this is someone who thinks directly or indirectly, right? So when we look at the ways, the thinking patterns people have, that's the meta programs.
Should I let her get her? Would I be a better trader if I let her just get up and get a drink of water?
If you were a better trader, if you would do that, then you might be divorced very soon. We want to be both, right? Great husbands or great partners and great traders.
Just give me the bottom line here.
No, I get into trouble with your wife. I'm not going to say yes here.
Okay, it's hard to change that paradigm. I mean, you're either a person who thinks of others or a person who thinks of themselves.
Yeah, and I love that you say that, because the biggest problem with most traders is, the biggest problem with traders who are not performing is that they think too much about what their loved ones will think about them, and that is all happening unconsciously. And so they're trying
to gain validation and approval that they don't get normally from their family or loved ones by being successful in the market, and that's what sabotages it.
I think I would say it's the opposite. They're afraid of losing someone's love because they're not performing, and they believe that they're not lovable because they might have not been as successful in areas of their lives that they wanted to be. Yeah, so that's what I hear over and over again. I want to be successful so that I can prove to my family that, they have done the right choice, that I'm not a disappointment, and so on.
Yeah, so I think that's probably a high percentage of the human population feel that way, don't they? I mean, would you say like 80-90% of the people operate in that world?
Yeah, definitely.
Okay, so, and that's a hindrance for them. How do you help them overcome that? Do people just have to accept that no matter the outcomes and everything that they do, they're still lovable even though they might be poor economically?
Well, the reality is that we are being judged by it, isn't it? So we can't really pretend that it's not happening.
Yeah.
And, I remember when I started out trading, I was like, yay, I found the Holy Grail. And then, a few years later, I was still not driving a Ferrari, which everybody expected me to drive one. So I took many years before I, turned the corner. What it comes down to is learning to accept ourselves and trusting ourselves. And knowing that whatever happens as adults, we don't, we will always survive, because if we feel that we are dependent on other people, that's a behavior that children have. They're dependent. And on some levels, someone who is fearing to be ostracized by their family because they do something that they want to do, but that the family doesn't agree with, that is that shows me that there's someone who hasn't fully grown up, become a responsible adult. Because a very healthy behavior would be, I totally get that you don't agree with me, and I'm sorry, but I'm still doing what I want to do because that's what I need to do for myself. And also, if I fail and if I fall over and don't make money and lose money, I'm not running to you guys. I'm going to find my way out of my own hole.
Right.
So that's also being responsible.
Okay, that's interesting. I think there's a lot of misunderstanding, though, about being dependent, and a whole generation about codependency, which people misinterpret and think that they have to do it alone, because there's a difference between collaboration and becoming dependent. One of something that has helped me become a better forecaster, analyst, trader is to have to do intelligence gathering of the work of people that I respect. I look at my work, immerse myself with people that see things that I don't see, and I don't consider that dependency. I consider that having the wisdom to gather information from smart people.
Exactly. And I love that you say that, Dale, because that's exactly what I'm trying to say as well with my traders. You reaching out for help is not weakness. And often children who reached out for help, they got ridiculed or they got shamed, like, what's wrong with you?
You're a baby. What a baby.
Yeah.
My best friend, Danny, still calls me a baby. My best friend from Chicago. I don't go to him to have heart-to-hearts, but
you go to him maybe to have a good time and go for a drink. I don't know. Like, I'm sure he has some.
Or I don't call my sister for sympathy. Because she's pretty harsh. So you have to know your customer, but everyone needs help. Everyone needs help. Everyone who became a great trader had great mentors, great coaches. How does an athletic team or a performer in any way become great without a coach?
Yeah, and that's exactly it. It's accepted in sports. America is a little bit more progressive, but here in Australia, getting a coach is still a sign of weakness. Well, thank God for Billions, because Billions has actually made trading coaches acceptable and not looked at as a weakness. But the thing is also that a lot of traders, they fear that they're being told that they don't have what it takes, and that's why they're avoiding help, because then they have to lay it all bare. Like, to really get help, you need to lay it all bare, and they are so afraid of that. And I love what you're saying about having intelligence around you, because if you also look at Linda Rushke, how she progressed through her trading. She was a turtle, and she also always hung out with like really amazing people. She immersed herself, like you say, with people who are smart, and she spent months with them trying to understand how they think, and not just look at how they trade, but how do they think, how do they live, what is their values, what is their beliefs. And that is what made her so successful, in my opinion, and everyone so successful. So becoming a lifelong learner. And when I watched Linda at the ATAA, she was still, you know, so interested in everyone, how they think and what they do. Again, lifelong learner. So why do so many people avoid joining a chat room like yours and trying to do it on their own? Yeah.
Ego?
Yeah, fear, I think, as well. Ego is trying to keep us safe, right?
Yeah, you know, I know that, you know, Blake and the guys that work at his fund who are multimillionaires, and he's going to be interviewing Tony on Friday, who, you know, one was in that $1 billion video of trading the British pound one day in a competition. These guys all talk to each other.
Nice.
I mean, it goes back to the old boardroom days at wirehouses where they'd have an investment meeting where everyone would bring their best ideas to the table, and they would get get different views on their work, and you know, it refines it, isn't it? I mean, don't they say that iron sharpens iron? So you can't sharpen yourself by just, you know, moving up and down in the air. You need the friction of other people.
Yeah, absolutely. That's what Einstein said, right? You can't.
Yeah, and I create a lot of friction with people.
Yeah, but healthy friction, right? Where you allowed to discuss.
Yeah. I'm just making a joke, but I did. I used to create the other kind too. All right, so Mandy, you know, I wish you great success and a great wrap up the year strong, and a great 2019, and that your words and your work really is a different way of looking at trading performance, is to get to some of our emotional core beliefs that might be affecting it, rather than the way we see RSI or some other tool or methodology. So, you know, you're pretty unique in what you do in the FX retail world. And I love your work, and that's why I bring you back, because, you know, it seems like almost everything, including trading, comes from the heart.
Yeah, exactly.
Okay.
The moment it comes from the heart, that's when we start performing.
Mandy, thank you, my trading warrior sister, for staying up late to be here on Face.
1:30 a.m., but that's all worth it to hang out with you guys.
All right. Well, we appreciate it, my trading warrior sister. You could follow Mandy and get in touch with her at mpx_trader. And I believe that's also the name of her website. And I think she offers a free assessment if you have the courage. Yeah, if you have the courage to open up to Mandy, you know, you could just tell from her demeanor it would be safe to do so in a gentle environment. So, you know, get a hold of Mandy and lay down on your couch and find out what the heck is happening. So, so with that, Mandy, have a great trading week.
Thank you. You too.
Really appreciate being able to talk to you every now and then.
Thank you. Take care.
All right.
Bye.
Bye-bye. Mandy Rafsanjani, everybody. See everyone for Turnaround Tuesday. Good hunting. See you in private members chat. And remember, today's the last day for our buy 1 month, get 1 free. And most of all, don't just count your pips, count your blessings. Me and the team will be back with you guys tomorrow. Adios. Thanks again, Mandy.